Hello, good morning, and welcome to our session today. We're delighted to be here. The session today will be no more than 40 minutes long, around 20 to 25 minutes of my guest and myself chatting, and around 10 or 15 minutes of questions from our audience. We'll also be recording this, and it will be available on the Moving to Portugal website very shortly after this event has finished. That's movingtoportugal.org.uk. So today we are here to talk about how to make your move to Portugal a financial and practical success. As you know, the pandemic is forcing some older workers to confront painful financial realities. And the fact is that many people are having to revise their financial planning for retirement. Now, one option may be that some are considering is to retiring abroad to a destination that is more tax efficient and offers some great lifestyle benefits like Portugal. So our aim today is to talk about how to make your move to Portugal a financial and practical success. And our guest today is Chamber Member John Mather, who's had over 47 years working in the financial services sector, and he's recently retired to Madeira, or more specifically, the beautiful Portuguese island of, he's retired to Portugal, and he's gone to live on the beautiful Portuguese island of Madeira. Now, I'm going to moderate the webinar, and John will explain some of the financial implications of the pandemic for older workers and savers, and he'll also detail the reasoning behind his choice of Portugal for his retirement. John and I will be discussing the issues around this for approximately 20 minutes, and then we're going to be taking questions from our audience. So feel free to ask the questions in the Zoom chat box on the right of your screen. Now, let me introduce myself. My name is Christina Hipsley, and I'm the General Manager of the Portuguese Chamber of Commerce here in the UK. Some of you will know me, and I can recognize some familiar names from our attendees today, because in normal times, if we remember those, we do lots of live events and seminars in the UK for the British who want to buy property and move to Portugal. So it's all on movingtoportugal.org.uk. And our next big live event, we really hope, is going to be in London on the 20th of April, 2021. So do come along and come and see us. It's much better face to face, but in the meantime, we're loving talking to you on these webinars. So, how to make your move to Portugal a financial and practical success. You know who I am, so let's introduce our guest for today, John Mather. Thank you, John, so much for joining us today. I know you're in Madeira. You're looking very happy and well connected. And I know you've got a busy schedule, even though you're supposed to be retired. So, John, tell us a little bit about yourself. Tell us a bit about your business background and what's going on in your life right now.
I started out my working life as a scientist, a materials scientist, with IBM's research. But in 1973, I changed that business and joined the financial services world.
Oh, right.
And I built that business up over about 15 years, from 73 till 88. And we had 6 offices, 8,000 clients, 70 odd staff. I was very fortunate in 1988. A number of institutions, including the Prudential, bought me out when I was age 40. So that was my first attempt at retirement. I spent 6 months in Spain thinking about what I'd do and got very bored. So I went back to work in 89 and built another financial planning practice, which was going to be bought out, but I decided you just can't sell clients. So what we've done is to form a new company called Stanbridge Family Office. I've recruited some very good younger people, and I've retained 9% of the business, and I'm helping them to transition those clients to their new advisors.
But essentially, you are retired now. That's the aim. But you're keeping your hand in the game a little bit, aren't you?
This is my 4th attempt at retirement. And within 48 hours of being here, I got 2 job offers. But I don't think I am going to seriously try to attempt to retire. But in
Good.
fact, since I've got to advise myself, I've got to keep up to date. I normally read 2 hours a day just to keep up to date with all the nonsense
Well,
and changes in
well, exactly,
legislation.
John.
Sorry?
As we know, you ended up taking your own advice. You looked so hard at Portugal that you actually took your own advice and decided it made financial sense to move to Portugal and retire to Portugal. So now, ladies and gentlemen, we're going to move on to a summary of the financial and lifestyle issues that John had behind him when he decided to move to Portugal. John, give us some reasons. Give us, you know, you're a savvy financial guy. You're an entrepreneur. You're a successful businessman. You're now trying to have a quieter life. Tell us about the background and the reasons why you decided to move to Portugal.
Well, I'd originally planned, I certainly wanted to retire to warmer climates. And originally I planned to leave in 2018. And the research I'd done at the time, because I've been doing some lecturing in different countries, I decided to move to New Zealand. Well, because the winters aren't that kind in New Zealand, I also decided we'd spend the other half of the year in Vancouver. So we got all the visas done. We even bought some of the properties.
Yeah.
But you know, as they say, if you want to make God laugh, tell him your plans. So in 2012, my wife became seriously ill and sadly died.
Oh, sorry.
So 5 years ago, I remarried. I was lucky enough to remarry. And we looked again at the plans. And by then I'd done some work with yourselves.
Oh yes, that's true. We met at one of our events some years ago, didn't we? Yes, I remember. Yeah.
So so Portugal came onto the agenda. It looked very attractive. The fiscal side of it was particularly good. And we researched how to set up the firm and look at the basic needs that we require. So
and
I think
we've just put up the slide of the hierarchy of financial needs to illustrate the point you're making. Yes, that's right. So
I think you've got to get the basics right, and Maslow's hierarchy of needs is not a bad start. I mean, if you can get all your basics paid for, and then work on the next stage of the more discretionary stuff, it's not a bad model. So have a look at that side of it. So you've got to have a model to work on.
So you really wanted the year-round warm climate, and some other reasons made you decide, didn't you?
Well, the lower cost of living is really quite helpful when you move into a fixed income. We wanted to add to the investment capacity we got by downsizing, increase our discretionary spending that way because we enjoy travel. We wanted the location to be crime-free. We wanted good medical services, at least as good as the NHS, if not better. I particularly like the idea of having excellent internet and 5G services, and we do already have 5G services on the island.
You've got 1 terabyte there at home, haven't you? Didn't you tell me?
1 gigabyte.
1 gigabyte. Oh, well, I know it's super fast, better than here in London, which is bizarre, but yes.
It's 100 times my North London's internet site. So it's very good. And that's obviously going to be quite a change in the next 10 years with development of technology. And then I also wanted the year-round activities. You know, we've taken up tennis again. We want the nature walks. We wanted the swimming. There are 2 golf courses here on the island, although I don't actually play golf.
Oh, well, that saves you a lot of time. But you and Martha went around the Algarve, Lisbon, the Silver Coast, didn't you?
Yes, we started with the Algarve. I think most people do. It's a very attractive location. But then we went to Lisbon, had a look at that. We went along the Silver Coast. We went to Porto, and finally we came to Madeira, where we found properties more affordable. And actually, it isn't that seasonal. It's 280 days of sunshine here. So we found it ticked all the boxes.
Okay. And but I can see there are lots of lifestyle reasons there, John, but none of them are fiscal. What were the fiscal reasons? What were the money reasons? What were the hard reasons that you, the financial reasons that you decided Portugal was your destination?
Well, I think it's important to actually get the lifestyle things right first. I mean, tax shouldn't dictate where you go in life. It would just be miserable. I mean, most people, this is sort of Monaco West to me, you know. I looked at the non-habitual residence visa for myself and the golden visa for my American wife. My visa was completed in 2019, and Martha should be completed in the next 64 days before the end of the year. The benefits of the non-habitual, you've covered with these Chamber of Commerce talks very adequately and very well before, but certainly the idea of having only 10% tax on my pension is very attractive. Capital gains and dividends, because I have retained some interest in businesses in the UK and actually also in Dublin with the Dublin City Rentals project that I have. So they're favourably treated for 10 years. And that sort of eases our way into a new life in Portugal. But what became clear very early on is we had to not do a half-hearted thing. We needed to be a permanent resident so that we could enjoy these fiscal benefits and not just a holiday home.
Okay.
I mean, in June 2016, we bought our apartment in central Funchal. This is a new property, and by that I mean it's less than 5 years old. There's only 24 units. There is a swimming pool. There's good maintenance programs, so we don't have to work too hard on maintaining property. Also, we wanted something that was only pretty close to town. We're 15 minutes walk into the centre of town, and we're 10 minutes walk in the opposite direction from the tennis courts we play at.
Okay.
So,
but I understand, John, that you did come out on, you moved to Portugal literally in March this year. You arrived in Madeira on the 21st of March this year. So you walked straight into lockdown on the island. But tell me, I understand you've made the important decision, which you urge everybody to do, to think through whether it's a permanent move, whether they're buying a holiday home or really moving. How is daily life and how is the financial side actually working out? How are the costs comparing?
Living costs here are about 30% of the general UK basic costs, probably 50% less than central London, some of the more expensive regions, say, where friends of mine live in Stockbridge and in Weybridge. So significant advantage there on living costs. And certainly compared with the Algarve, the property prices, and Lisbon as well, the property prices are much more sensible.
Yes, much better value. Okay.
Yeah, so
the effect has been that your discretionary spending has more than doubled, would you say that?
Oh, more than doubled, yes.
Okay.
Comfortably doubled. I mean, it's early days, but certainly the first 7 months, we're actually under our budgets we thought we were going to be spending.
Well, lockdown may have something to do with that. You're going out less than you might be.
No, we're pretty open here.
Okay.
We've managed things very well. There is plenty of restaurants. We went to the theatre, to a concert the other night. Okay, there's half the audience or less, but everything's still going on pretty well.
Well, yeah, Portugal is handling the pandemic in a highly efficient and practical way. Now we're moving on to the third part of our conversation before we start taking questions from the audience. Several questions are coming in. So, John, we're now going to talk about the practical issues to be avoided or concerned about. So you've talked about the positive aspects, the lower cost of living, the value for money, the quality of the lifestyle. But what are the practical issues that you would advise, or what have you learned the hard way that you would pass on to your friends and colleagues and clients? What are the practical issues to be avoided or concerned about while living in Portugal or Madeira?
Well, you're going to be entering into important contracts, and of course the contracts are written in Portuguese. So if you're not fluent in Portuguese, that's something you have to deal with. And I dealt with it by looking for a good accountant and lawyer to make sure that I was being advised correctly on these things. I mean, I was once told that anyone who uses themselves as an advisor to themselves
has a fool for a client.
So I do remember that. And in fact, I spoke to over 14 service providers when looking around. I was lucky enough to get on very well with one tax and accounting specialist who has his own in-house lawyers. So I've got a one-stop shop, and I've been asking him lots of questions on things that I think I'm familiar with, but then I find that it works differently in Portugal. So the
So
choice of advisor is
yes.
very important.
So he's found a client who knows what he's talking about, your advisor. So obviously your choice of advisor was important, but your financial advisor in Portugal. But how did you make the decision about where to buy a house? I mean, where you live makes a really big difference, doesn't it, to your
Well,
lifestyle?
a huge difference. You know, for instance, we don't have a car yet
Mm,
here, but then we've not needed one.
mm.
Hiring a car for the odd event that we've needed is incredibly cheap. Taxis are very cheap, and we can walk everywhere.
Yes.
Um, so that's a huge advantage.
And yes, I know we're about to put the slide up showing the difference, the income in Madeira. So what people live on in Portugal, and you're going to tell us a little bit about that, aren't you?
Well, if you look at the income distributions in the UK, you'll find that the median income's around £2,413 a month, and then you look at the incomes here. If you look at that next slide, the income distribution isn't that much different. It's about half the population earned 2,500 or less. So if you can work out where you fit into that sort of equation, where you are in society, you can that will give you some sort of clues on your living standards and what you need to try to think about providing for yourself to be comfortable here. I think the other thing you need to think about is the impact in the first stages of taking this non-habitual residence, because if you're paying less tax, and I believe I'm paying at least half the tax rate I was paying before, with everything taken into account, and then the cost of living half again, obviously on the same income, you're materially better off, more than 3 times better off than I would be on the same capital in the UK.
Okay.
So a very, very useful advantage. That's only for 10 years, remember. You know, but there's one thing that is also common with the UK. When you're speaking to people here about the retirement, they constantly underestimate their own longevity. Now, I've done a graphic here which I wanted to show you here.
This is life expectancy for your plan.
Have a look at the life expectancy slide, and if you click it through to the first things, look at what this impacts. Let's say we've got 2 people at 65. The probability of one of them getting to 92 is 50%. And there's a 25% chance of one of them getting to age 97. So if you realize we're dealing with retirement plans over a 30 or year or more period, it's very important to build in this optimism on life expectancy, because otherwise the temptation is you're going to be overspending in the early years and you're going to run out of money. So being optimistic, but then careful is the plan. Obviously, with the ability to withdraw money from a pension tax exempt for, well, in fact, I'm tax exempt, but they brought in a change last year to make it 10% tax on pensions. Then you need to be careful with your money. Also, the other thing you need to be careful of, it's all right Portugal admitting that you've actually arrived here in Portugal for tax purposes, but you better let the Inland Revenue in the United Kingdom know that you've left. But they're not necessarily the same thing, because you're committing to come to Portugal for 183 midnights a year, 883 days a year. But you also need to know that having left, if in fact you spend more than 15 midnights in England in a year, then in fact the revenue will not automatically treat you as having left. There will then be some tests that need to apply, and you look at these statutory residence rules. I won't go into those now, but if anybody wants to talk those through, I'll be happy to explain at a later stage. I don't think that's for today's venue. And also, there's one further thing, one nasty little sneaky thing. If in fact you don't come for more than 5 years, then the Inland Revenue can recharacterize the events that you've and the actions you've taken over the preceding years by introducing what they call a temporary non-resident. So be careful there, because if you've withdrawn lots of money from your pension plan in the first year, which you would have paid tax on in the UK at a high rate, and then you go back, the revenue will seek to recharacterize those transactions as being UK tax liable. So be very careful there.
That could be extremely expensive.
Yes.
Okay. Now, what are the other concerns that people should be aware of?
Well, I think I mentioned already. Is this a permanent move, or are you buying a holiday home? There's no halfway house here. You really should decide which you're doing, because if it's a move that's permanent, then in fact you've got that fiscal opportunity. Otherwise, you're buying a holiday home, and nothing will work. And in fact, if you're doing that in retirement, you know, you're actually doubling up on your expenses. You're lowering your discretionary income, and you're taking away what I call fun tickets for going and enjoying the assets that you've raised.
Okay. So I know that talking about the concerns that people should be aware of, the impact of the gradual changes. Now, I know you have a slide coming up shortly of a frog in boiling water. I think our frog is going to appear any minute. The impact of the gradual changes, John, tell us a little bit. I know inflation is a particular concern for you, isn't it?
Well, if you put that graphic up, and really what we're saying, it's very comfortable. You're in nice warm water. The frog is there. He's comfortably sleepy. The water's getting hotter, and before you know it, you're boiling and it's killed you.
Yeah.
So you need to be aware of these gradual changes that are happening. Inflation, for instance, if it's only 2 or 3%, over 26 years, the buying power of that money is going to halve. So you need to build in some inflation proofing into your income planning. You need to do that.
Okay.
And the other thing that you need to look at is the next one, if you pull that next slide up, which is currency.
Currency risk, yes.
Have a look at the currency risk, because if your income is coming from the UK and you're spending in euros, just look what's happened since 2000. You know, the euro was up there at 170 to the pound. Today it's 110. And even in the shorter term, if we look at the last period in the next slide, which is since 2016, that's a 21% drop in just those periods. So a 35% drop in buying power over the last 20 years.
Yeah.
Now, what happens if you've got inflation and this combining together? Then that's going to catch you in a nasty scissor movement. And the solution's obvious. Your investment portfolio should generate euros for you to spend in the euro area. And if you still need pounds, then you should have some of your portfolio in pounds to generate income there. And because trying to catch, it's always like to catch a falling knife, trying to get currency movements right. So just protect yourself in those two ways.
Now, I know, John, that you tell us, of course, it makes sense to invest, to match your investment portfolio and the income that derives from it into the currency where you're going to spend your time. Now, I know we have a slide showing a very simple retirement, now at retirement in uncertainty. So I know that slide is coming up very shortly. Tell us a little bit about that.
Well, really, it's easier for you to practice on paper, right? Don't with the real thing, and try to understand some of the very few, and there are not that many factors that influence the way in which your portfolio moves. I've put up a very simple matrix of the questions that matter. And what happens if you can build your plan based on this sort of cash flow planning, then in fact you'll probably have some success. I mean, in this particular instance, the first slide shows you some of the parameters, and the second slide shows you that in this particular case, this chap who'd started in his early 60s actually still has got money in the bank at 94, and yet he's had a rising income for over 30 years. So this gives you a model. And if anybody would like, I'll happily send them this this spreadsheet, because it's crude, but it's actually pretty good on getting the factors sorted out.
Wonderful. Well, thank you, John. We'll take that. We'll send those to anybody that wants them. So I can see that your 50 years in the financial advice sector has clearly informed your thinking and your financial planning and your move to Portugal. So now we're moving into the final few minutes of our session before we take questions from the audience. We're going to discuss the results of your move versus the expectations. So tell us a little bit about, very briefly, so that we can take questions from the audience. What are the results of your move compared to your expectations? What have you been surprised about?
Well, I think overall, I think it's exceeded our expectations. There are some niggles. I mean, for instance, the ferry isn't working at the moment, so we've looked at getting a car across here. You do get, I did look at it last year, brought a car across to try it. I then found that the duty for importing was actually going to be worth more than the car was worth, so we sold that car. You do actually, with the visa, you're allowed to bring one car in without a tax charge, so that's useful. Seems a bit prohibitive at the moment to bring it by sea here. I think probably I'm going to wait for the ferry to be re-established a bit later and leave the car in storage. It's probably going to be cheaper. I think the other thing that I've noticed, and it's probably true this year more than ever, some people will be made redundant. Some people will have taken retirement earlier than they'd perhaps planned. So that affects their national insurance record. Now remember, it's 35 years for the new state pension. Have a look at the national insurance. It costs nothing to do. It's called a BR19 form. You get what from the government.
Yes, we're going to put a slide up saying the state pension statement. Yes,
the state pension statement. Now this will show you your national insurance record. Now, why is this important? I know it's a small point, but in fact, if you've got gaps in your record, you can correct them, and normally going back as much as 6 years, or you can maintain them with voluntary contributions. Now, just look at the mathematics. It's not complicated. If in fact you had a complete year missing, let's say last year was missing completely, then in fact the maximum that you'd actually be asked to pay is £796. For that, you would receive an added state pension of £232
a year.
Now, I can't think of many financial products that give you 29% return on your money. You've got to compare it with annuities, but 29%, and you could have as many as 6 of these. That's not an insignificant amount of money. Also, at the moment, they're index linked, and there is some growth in those every year. So little things all these little things do need to be planned.
That's assuming that the government honours its promises. We can only hope that the British government continues to work out how to pick up the bill for the ageing society here in the UK. So just before we take questions from the audience, John, just give us a very quick comment from you about how Madeira is handling the pandemic. How are you feeling over there? Because I know here in London, it's very, very grim news every day and getting worse. How do you feel things are in Madeira?
Well, that's why when we were hearing what was being said in March, we just picked up the suitcases and brought the plans forward and left. I mean, that was preparation meeting opportunity, really.
Yeah.
And we came out here. We're fortunate here because there's only one route in at the moment. There's the airport.
Yeah.
So testing is done at the airport.
Okay.
Everybody's tested. We've had just over 400 cases now altogether since the beginning. We've had no deaths, and 95% of those cases have all been imported from people and detected at the airport. We've had very few locally transmitted arrangements. And
Madeira is still on the open corridor list with the UK, if anybody's thinking of going over there. So you don't quarantine for 14 days when you come back from Madeira, just at the moment, into the UK. Now, John, tell us very briefly about if by chance anybody does want to go to Madeira, some of the hotel groups are offering incredibly special prices, aren't they?
Well, I talked to one of the large groups about the costs. They say the hotels are running at about 30% capacity at the moment. But one of the largest groups is promoting visits to Madeira, and a 4 or 5 star hotel, they've only got 2 of them open at the moment. They're actually offering 7 nights for only €150. So again, if anybody on the call wants to partake in that, I'd be very happy. And I just need their name, their phone number and their email, and I can pass that across to the hotel group. They would be very happy to be in touch and promote Madeira. I think it deserves a trip to Madeira to check it out. It is a
Well,
sensible
yes,
place to
Madeira
go.
is a beautiful place. I urge everybody to visit the rest of Portugal as well, because it's equally beautiful. But John is lucky enough to be sitting in Madeira right now. We're going to take the slide down now so that we can start taking questions from the audience. So we've got 10 minutes left, ladies and gentlemen. We have a question, John, from Mike. Mike is asking, I'm particularly interested in the tax implications of becoming a Portuguese resident. And John, he's asking, how are pension income, ISAs, investment income and property taxes treated?
Well, until this year, pensions were taxed at 0 for 10 years. But due to pressure from other European states, that's been amended to 10% tax on your pension, and that's for 10 years. The ISAs, okay, they're tax exempt on pulling money out in the UK. Sadly, that only applies to the UK. That doesn't apply universally. So in fact, you're probably looking at rearranging that. Premium bonds, for instance, are viewed as gambling, so would be taxable. Maybe that's something you should consider as well. It's really dangerous to assume that the rules that apply in England apply here as well. I mean, for instance, one of the thoughts I had was about, suppose we decided to downsize in the future. Well, in fact, if we don't reinvest the whole of those proceeds, then there's a danger of getting capital gains tax on the profit in Portugal. In Portugal.
Yeah.
Now, that doesn't apply in the UK. So that's one reason why we decided to go straight to the downsizing now.
Right. Oh, I see. Now, Mike is also asking, he's thinking of moving to Portugal, but he's considering retaining ownership of a property in the UK while living in Portugal. Are there any capital gains tax implications if Mike sells his property in the UK while being resident in Portugal?
Well, in fact, we've done the same thing. We've retained property in London. So essentially, our primary home, you need to get a valuation as you leave, because you need to establish what your leaving point was. And until that time, then obviously there's no capital gains tax on your primary home. Right. But the UK brought in rules 2 years ago now, so that if in fact after April of this year, if in fact you sell a property and you're a foreign owner, then in fact you'll pay capital gains tax in the UK on the uplift in profit that you've made. And you'll have to pay that rather quickly. I think it's 30 days now that you have to do that.
These are important points, yes.
So again, get the documentation right, get the valuations. No doubt that I see that at the moment the valuations are actually quite high and have been sustainable. So it's a good time to get a valuation before you leave.
I have a question for you, John, from one of our audience right now. If you have a property in the UK, how long can you spend in the UK if you are non-habitually resident in Portugal?
Right. Well, there's the simple rule. In fact, I was drawing up a flow chart of this the other day to try and get my mind around it. But certainly the question isn't asked if you're there for less than 16 days.
In the UK?
In the UK.
Nobody
so you're definitely non-resident from that point of view.
So you could still have a property in the UK, but be resident for tax purposes in Portugal.
Yeah.
But you must not spend more than 16 midnights in the UK.
Right. Now,
in that year.
Now, but if you do spend more than 16, then it matters how many. If you spend 183 days, just over 6 months,
in the UK.
In the UK, then you're definitely resident in the UK.
Yeah.
Now, and then in between, you have these what they call ties. Now, whether you've paid tax in the last 3 years, whether in fact you have a property available to you, whether you have domestic ties and liabilities, there's a whole raft of those ties, and it depends how many of those ties, depending on how many days you can spend. And you'll find then that you get a number of trigger points, like. For instance, if you do more than 3 hours a day of business work, then you're limited to 30 days. If in fact you've only got 2 ties, then it might be 45 days. So you need a little spreadsheet there to fit your own circumstances. And again, this is something that an advisor would easily provide for you.
Perfect. Now, many of our viewers are asking for the spreadsheet, so we're certainly going to supply that to you after we finish this seminar. We'll be finishing in around 5 minutes' time. Now, we've had a question from FR asking, is it the Pestana Group in Madeira that's offering those amazing hotel rates? I don't know if it is, John. The hotel that you mentioned, was that one of the Pestana hotels?
I was told not
to mention,
not to widely publicise it. But certainly if they ask for the information, I'm happy to give it to them.
Okay. We've also got a question from Kareem asking, is it true that the Golden Visa program is ending in certain areas in Lisbon? Kareem, I can answer that, and John may have a view. No, the Golden Visa program is not ending for Portugal. What's possibly coming to an end during the course of next year is the promotion of the Golden Visa properties, if you like, in Lisbon and Porto. And that is simply because the government is reconsidering whether to try and encourage people who are investing in Golden Visa property to move outside the hard city centres of Lisbon and Porto and move into the surrounding areas and other cities in Portugal that are equally attractive, but are not being targeted in the same way. It's under consideration at the moment by the Portuguese government. No decisions have been made, but it is possible, yes. So keep your eye on the news to see what's happening there. Now, John, let's return to another key question we've had, which is, what about wills in Portugal? Tell us a little bit about wills. If you're going to go and live in Portugal, what should you do about the will?
Good question. Very good question. A very important one. I mean, in fact, if a lot of people don't even have a will in England, so but certainly you've got forced heirship rules here. You can't necessarily disinherit a child, for instance. Now, there was a provision in Europe a few years ago that allowed European citizens to effectively elect which jurisdiction the will would be interpreted in. England sadly removed itself from that agreement, and we've got some changes coming up in January that none of us know what's going to happen. So this is a subject that is going to change, and it's difficult to give proper advice at the moment. In theory, you could write a will between now and December and actually elect for it to be in England. You've also got to remember that domicile is not the same as residence. And in England, you know, having left the UK authority will still regard you as being domiciled for the next 5 years, which means you're subject to inheritance tax in the UK. So that's something that needs some thinking about, along with the will and succession planning. But right now, unfortunately, the governments need to get their act together to tell us what the rules are, so there can be absolute clarity. There is some opinions. I've asked about 5 people and I have 5 opinions so far. So work in progress. Work in progress.
Okay, final question before we finish, because we're 2 minutes from the end of the session. And apologies to our viewers who haven't had their questions answered, but we have to keep this to 40 minutes for practical purposes. But John will be happy to answer your questions at a later date. Tell us, John, just very briefly, for people thinking of moving to Portugal, how does it work in terms of financial investment advice in Portugal, and what are the charges for investment advice if you're living in Portugal?
Charges from the banks that I've talked to are opaque, very difficult to understand the charging and how much of your money is shrinking through commissions and charges. I think since you're working with people, you know, I haven't seen things like that since the 80s in the UK. You know, with the financial advisor, you're employing somebody on a long-term basis. This isn't hit and run stuff, is it? So it's very important. I've seen horror stories of 7% up front and 2 or 3%
banks.
2 or 3% a year of charges. In fact, one chap, I asked him whose retirement he was thinking of, his or mine. But
well, the advice business in Portugal is a bit different, yes.
But there are good people here, and good people will actually tell you frankly how much it is. And in fact, don't be frightened of asking for a reduction. You know, it's a two-way thing. It's not there forced. I mean, we in my business, the reason we had 8,000 clients is back in '73, we told the clients what the commission was. And we had discussions and we rebated because sometimes they're obscene. So just know what you're paying.
Okay.
Ask very, very firmly, and it's not impolite to ask. It's a transaction. It's a deal.
It's your money and it's your future. So we're going to put the contact slide up again now, and I'm just going to say we're going to finish on that note, ladies and gentlemen. Thank you for your questions. John will be very happy to answer any other questions from you. We've put the contact details here, and please email John at the email address he gives you on the slide. Alternatively, please feel free to add John Mather as one of your contacts on LinkedIn. It'll be useful for you, and you can then swap emails via LinkedIn. And we will also put both our LinkedIn contacts in the Google or in the Zoom chat box right now. If you found this seminar beneficial and you know another company or an individual who might benefit from it, we are doing part 2 of this seminar, how to make your move to Portugal a financial success and a practical success, on Tuesday, the 17th of November. And we'll be looking at some case studies then as well. So it only remains for me to thank John. John, thank you so much for your time and your effort. And thank you very much to all our audience. It's lovely to see some familiar names here with us today. And we look forward to seeing you at the next seminars, or webinars, I should say. And have a look at movingtoportugal.org.uk for news about the next seminars. Thank you very much. I'm Christina Hipsley. See you very soon. Bye-bye.